First of all, thanks a lot for inviting us. It's always a pleasure to be here and to talk about ESG, which is a subject dear to our heart. Uh, so over the next 10 minutes, I have a few slides for you. I'm not sure if we are showing the slide deck yet, uh, but in the interest of time, I can always start the exercise. Uh, so sustainable finance, or more specifically, the sustainable debt market, relatively new market, a lot of innovation taking place in this particular space. But I think before we speak about sustainable finance and the implications, potential opportunities for us in the region over the next 10 minutes, we should briefly talk about ESG investing. ESG investing, so many definitions out there, but we could say it's an approach where investors, they go beyond their traditional, arguably more narrow focus on risk and return, and they take an active interest in the type of environmental and social exposures, qualities of the investments they make. This can be a company, this can be a debt transaction or an equity transaction, and quite a few ESG strategies out there, but I think what we will focus on today is going to be impact investing. In impact investing, the emphasis still remains financial returns, but when investors are trying to generate those returns, they want to ensure when they do allocate the allocated capital goes into investments, assets that have some type of quite explicit environmental or social benefits. So impact investing has been the key driver of growth for this market, especially for the past 5-6 years since the signing of the Paris Agreement. And when you look at the market, it sometimes gets confusing. A lot of innovation taking place. Almost on a monthly basis, you hear of new tools, new concepts, but let's not get confused, and let's categorize the market into two key categories. First, we could talk of use of proceeds instruments. And this is where you basically have an issuer that has identified a certain project that he wants to finance. This could be existing assets which he wants to refinance, or new assets that he wants to finance, and he goes out to the market to search for financing. And the funding, the proceeds raised, are used explicitly for this project. So the largest part of the market is this use of proceeds instruments. And these are your more traditional green bonds, social bonds, or sustainability bonds. But now there is a relatively recent component of the market. And I get messages from the audience. So this new set of instruments, it's a relatively recent innovation of the market, is the sustainability linked instruments. Here, the focus, unlike for the use of proceeds, the focus is not on the underlying assets, but it is on certain performance indicators that the issuer defines at the very start of the transaction. It could be saying things like, I want to reduce my emissions 15% over the next 5 years, or I want to reduce my waste levels 20% over the next 5 years. And the cost of the liability that he will issue, its repayment terms will be linked to those performance indicators. Like if he is unable to match those performance indicators, the cost of funding for them could increase, for example. And we believe, as we will discuss later, this will allow us to capture a whole new set of issuers in the sustainable debt market over the next few years. If we can move to the next slide. So we said this is a relatively new market. And if you look at the volumes since 2018, significant amount of growth. We'll go a bit more into the details of green bonds, but really green bonds is what started this market. But over the past few years, what we are now seeing is emergence of other assets under the sustainable debt market, such as social bonds, transactions where proceeds are used for projects with social benefits, or sustainability bonds, as well as sustainability linked bonds. This year, in short, we expect the total issuance to reach around $1 trillion, And that tells you this is no longer a subset of the fixed income market or a relatively marginal asset class. It has become quite mainstream over the past few years. So if we move on to the next slide, let's talk about what these green bonds are. Basically, you can think about any instrument, and we can talk about green bonds as well as green loans, where the proceeds are applied to finance new assets. This could be a pool of assets or one single project, or to refinance existing assets that are qualified, eligible green projects. And if you look at the type of projects that are generally qualified for these issuances, we can talk about renewable energy, which we will discuss is an important opportunity for our region. We can talk about energy efficiency projects, green rail, green buildings, so the list goes on. Let's move on to the next slide. I think this chart is very interesting, and the key takeaway from this chart is that it really shows you how new that market is. So the first green bond issuance globally was by a supranational institution called European Investment Bank in 2007. So you could argue the green bond market already has a history of 14, 15 years. But really, the first few years of the market, we had a very limited number of issuers, largely supranationals, the likes of World Bank institutions, EBRD, trying to create a market, trying to create a momentum that the private sector can follow through. And the whole game changed with the signing of the Paris Agreement in December 2015. You know that a lot of sovereigns, they gave their nationally determined contributions in terms of investments they will undertake to decrease the emission levels, to keep global warming to certain standards. And after the Paris Agreement, we have seen major investments coming in, specifically in the renewables place, but also a lot of funds globally being allocated, be it from the government or government-related entities or global financial institutions. And the issuance really skyrocketed. And if you look at the picture now, total issues as of last year reached around $1 trillion. And over 90% of that $1 trillion is the issuances of the past 5 years. So this is really a very new market in terms of total activity. So when sometimes investors have questions or concerns around greenwashing, lack of standardization, or lack of common language, we need to keep that in mind, that the market is still evolving. And going forward, we expect this market to continue to grow at a very fast pace. A key driver behind this is the climate-related investments that needs to take place over the next decade for the sovereigns to meet their climate targets. You know that in this summer, with the signing of EU Fit for 55, European Union further, narrowed down their goals. Now they have even more aggressive targets, and with President Biden coming to power, US came back to the Paris Agreement, and they also now have quite aggressive climate-related targets as well. So all these infrastructure investments, and also in our region, today we are speaking specifically about Saudi Arabia, will be important drivers of growth for the green bonds market. We can move on to the next slide. Thank you, Michael. So what do we finance? The key assets are, over 80% of the assets are renewable energy, green buildings, and transport. And I think the top one, renewable energy, is the most interesting one for us, because this is really an important opportunity for the GCC region. We know that our region enjoys certain benefits in terms of solar resources. Solar radiation levels are quite high throughout the year. Installation costs have been declining significantly over the past 10 decades. We also have a lot of other structural advantages. So some of the sovereigns in our region, UAE first started this, and now in Saudi Arabia, we see very ambitious goals. There are a lot of projects that's going to come online over the next decade as the sovereigns try to move away from hydrocarbon for power generation to renewables. And we believe some of these assets will need to be financed by the bond market as well as the loan market. Historically, our region is more of a bank market, so we see more transactions on the loan side. But under the Saudi Vision 2030, Saudi authorities have some quite important goals to develop their debt capital markets too. So we expect that will create traction on the debt side of the equation as well. So if we move on to our next slide, I'm cognizant of time. I will quickly cover the sustainability linked instruments. As we said, this is a relatively new instrument. Two key differences relative to use of proceeds instruments, such as the green bonds, are first, the focus is not on the assets, it's more on the objectives, specific targets determined by the issuer, and the cost of funding can differ depending on the performance of these objectives, whether the issuers are able to meet those objectives or not. And because there is not such a strict focus on the underlying assets, this can be used for any general corporate purpose. And it gives a way more flexibility to issuers when they use this funding in place. And we believe this will really broaden the universe of issuers over the next few years who can obtain sustainable financing. If we can move on to my last slide. And what do I mean by that? Traditionally, if you look at the green bond markets, there are a few limitations. First, you need to have projects to finance. But not necessarily all sectors globally have green projects to finance. For example, if you're in consumer discretionary or healthcare sectors or other consumer sectors, you might still be able to undertake organizational initiatives for emission abatement to reduce your emission levels. And you would potentially want to be rewarded by that. You want to flag this to the market, but you don't necessarily have capital expenditures accompanied by these goals. So this type of issuers, which were not necessarily very prevalent in the green bond market, can now come to the market as well. So this creates an opportunity for them. Secondly, not everyone is necessarily ready for the governance levels imposed by the green bond transactions, particularly for issuers that are at a relatively early stage of their sustainability journeys. Sustainability linked instruments could be interesting opportunities. And finally, when you look at the green bond market, it is predominantly dominated by green issuers in certain spaces, including utilities. But for certain sectors, we can talk about material sectors such as cement or steel. These are not sectors where emission abatement projects are always easy to come by, but they can still have their own internal metrics or certain emission targets they want to achieve, such as declining their waste levels, declining the emissions outside the combustive processes. So this will potentially allow this type of issuers to come to this market as well. So we believe the sustainability linked instruments is going to be a quite important opportunity for our region too. I think, Mike, I'm already used more than my time, so I'll potentially stop here and we can discuss more during the panel session. Thank you.
Okay, wonderful. Thank you, Timuçin. I think we'll turn to Abdulaziz now. Abdulaziz?
Yes. Well, thank you, Michael, and thank you for the association for organizing this webinar. It's great to be in such a great gathering. Talking about the general SEC experience, which is last year, a unique experience, being the first, green issuers in the Sukuk market coming out of Saudi Arabia. It was a unique, experience. SEC, as you may know, is the main player, I would say, in the power market in the kingdom. We own and operate 100% of the generation and transmission businesses. We own 70 to 65% of the generation capacity in the kingdom as well. So it's an integrated utility company playing an important role in the power sector. So SEC is a key pillar to the transformation of the electricity sector in line with the Vision 2030. And it was the main two objective of SEC was in the beginning, I would say, 2019 and 2020, and even this year, is to focus more on the automation and smartification of its systems and grids and distribution to capture energy efficiency and basically connecting the customers in a more efficient way, which will be having impact on our operations and our generation and emissions and stuff. That's one. The other thing is, as you may know, the integration of renewable capacity, the ambitious plan of the Kingdom to build renewables in the Kingdom started back in 2019. SEC is basically responsible to connect all of these, power plants to the system. So I would say all of the deployed investments of SEC was to achieve these objectives, to have, clean and clear, positive, environmental and social benefits contributing to basically to the sustainability. Now, this obviously matches the, I would say, the interest of the market, of the investors, and the broader sustainability ambitious, in the global market as it's, rising year on year. So this was very, sensible to SEC to use the Green Sukuk as a natural, fit financing instrument to basically increase demand on the paper that we are issuing, and also diversify our investors base, reaching out to different investors, which obviously will benefit the corporates and SEC in general. From focusing a little bit on the process perspective and how did we do it and what was our experience with that. The issuance process is relatively similar, give or take, with the conventional Sukuk, except for some additional documentation related to the green credentials of SEC or the issuers. The transaction, some of these, additional documents, I would say one of them, and the main one, is the Green Sukuk framework, which established it in line with the prevailing standards. And in our case, we use the ICMA standards. Typically, the Green Sukuk framework or the Green Bonds framework includes 4 main components. One is obviously the use of proceeds and the eligibility of the project that is getting financed by the proceeds. Second, the Green Sukuk framework has to also include the internal process for the project evaluation and the selection of the eligibility of these projects. The third one, I would say, the management of proceeds process. This has also to be clear and part of the Green Sukuk framework for the investors to see how the proceeds is going to be managed. The last one is the allocation and the impact reporting commitment post the utilization of proceeds. There is an additional commitment by the issuers and by SEC to go and basically reports to the investors, how did we use and allocate the proceeds after a year from issuing that paper. In addition to that, additionally, in alignment also with the best practice, issuers are encouraged to obtain and publicly disclose the second party opinion on the Green Sukuk framework. In our case, we had an independent, international recognized and external ESG verifier who checked basically our Green Sukuk framework, ESG, and they publish a report and give an assurance from an independent point of view. In our case, last year, we received a favorable external second party opinion by a well-recognized organization, which is BGO IRIS. The opinion was strong, and it was given an assurance of what they used the term reasonable assurance, which is the highest level that is being used by that organization on assessing SEC use of proceeds of that issuance. In addition, the efforts, we also established an internal ESG framework. And this obviously, it was in line with the company's strategy overall that comes out of the board of directors to have clear milestones and clear achievements to reduce emissions and operate in a more and impact the environmental, the environments generally positively, and some have social and governance, objectives and targets year on year. We conducted a virtual roadshow, given that we were living in a COVID pandemic restrictions. I would say the main difference than the typical Sukuk was the focus has been always on the conventional one was on mainly the credit story of SEC, the development from a strategic and operational perspective, where in this time we focused on that too, and given that SEC has been an frequent issuer to the global market, and we've been issuing and tapping into the global market and the dollar market since 2012, the focus to this time was more on the ESG, on the green, and the questions that we've received from the asset management or the investors who have great interest in the green was focused on how SEC is committed to this, strategy. Is it just a one-time that SEC would like to finance a specific project, whether it's the smartification of the network or the connection of the renewables, or is it just a long-term strategy for SEC that SEC will continue to invest more and will impact the ESG targets? And I think we issued our ESG this year, performing and actually surpassing our targets that we put on ourselves last year. So the walk is matching the talk is matching the walk. So and this is what we were trying to basically explain to the investors, the strategy, and it was a convincing story. We received a very positive comments, and this has resulted in a very positive, successful transaction, I would say, and resulted in high demand. And I think the investors happy with the way we did it, and that's resulted in a high demand. So this is, I would say, in an overall, strategic and process and feedback and interaction with market perspective, in a short, comments.
Thank you, Abdulaziz, very much. That was an excellent journey that you've described through. Over to Oliver.
Thank you, Michael, and first of all, I guess thank you to the GBSA and S&P for organising this event today, and great to be part of it. Timucin, Abdulaziz, it was really good to hear what you just presented to us, and I think really interesting for everybody. Involved, and I think such an important topic in general, just the sort of the greening of Saudi Arabia. I mean, we've seen so many excellent announcements coming out recently. The sort of the renewable energy side has really started to pick up. The financial close of the Sudair photovoltaic plant only recently, which I'm sure Abdulaziz and his colleagues are busy connecting to people's homes in Saudi right now. And obviously something that Standard Chartered is delighted to be playing a part of, having just opened our first our full-time sort of branch in the kingdom, and expanding our presence there, and working with all of our partners and clients in the kingdom, particularly to support their ESG agenda and their transformation on the kind of the sort of the energy transition side. So very much looking forward to moderating this panel discussion now, where Timucin and Abdulaziz will be joined by the Saudi Exchange Tadawul, and hearing some kind of more insights into what's happening in the Saudi capital markets in general, the regional sort of green space, and diving into some of those details of what it takes to be an issuer of a green sukuk in the kingdom itself. So I think for my first question, Timucin, I'll turn to you. It'd be great to get your thoughts as someone who looks at this sort of from and kind of sees all the different bits moving around together, not just regionally but globally as well. The regional market has not performed quite in the same way as the global market has. I mean, globally we've seen all these record numbers, H1 numbers according to Bloomberg were $40 billion over full year 2020 sustainable bond issuance levels, but in the region we've actually seen only I think two green label bonds this year. So it'd be great to get some of your thoughts around why some of the cases like that might have happened. I don't think there's a definitive answer, but some flavor on that.
Thanks, Ato. Definitely a very fair question. I think rather than it has to do with the underlying assets, it has a lot to do with the structure and the development of the debt capital markets. Yes, we are trailing behind the globe, although we have all these potential assets that's going to be in the pipeline over the next decade. Our green bond issuances haven't been necessarily at the same levels, but it's also very hard to read into year-over-year figures because the issuance has been very sporadic. But what we are saying, particularly for Saudi Arabia, is first, authorities have done an amazing job over the past 10 years in developing the equity side of the business. Saudi Arabia, Tadawul, is the largest equity market here, not only in terms of its market capitalization to GDP, but in terms of its actual infrastructure, in terms of the trading volumes. And when we look at the IPO side of the equation, and I will tell you why equities is important, because it's just one other side of the capital structure. This is also the largest IPO market in our region, where companies come, they raise sometimes record level of proceeds. And we have seen a major increase in that over the past 3 years, I should say, in line with the initiatives under the Saudi Vision 2030. And Saudi authorities are also developing the debt capital markets under the same initiative. We are seeing local currency issuances. We are seeing new GREs tapping the market. And we think it's really hard to make an explicit short-term forecast, but we see secular long-term opportunities for the debt capital markets in general for Saudi Arabia. And given the nature of and level of renewable investments they will undertake, like we have seen in the case of SEC, we will also potentially see more transactions in this space. Not every transaction might be in the bond space because we are more of a bank market, but we are going to see the green loan side of the equation being quite interesting as well.
And I think that's a very relevant point as well, with Egypt just launching their sovereign green loan. I think a week ago now was it hit, and we saw the headlines around that. So I think that is a good observation as well, that it's not just the bond market, but also the bank as well that is there. And I fully agree with you. I mean, we're working with a lot of issuers that are putting in place their frameworks now. So as Abdulaziz was describing that process of the framework and then the SPO with Vigeo Eiris, we're working with them to get that in place now, get it ready, so that when the market's right, when you're ready to go for your issuance, you've got that green work stream already done. And potentially you can even start going on a non-deal roadshow with your investors and get them familiar with that green story a little bit different, and engage them on before, and just helping to add that kind of color there. Reem, I'd like to bring you in now, and it'd be great to, I guess, just to get kind of your thoughts on what's been happening in the Saudi capital markets more generally recently, and what is Tadawul doing to kind of support those and support Sukuk issuers in particular?
What happened in it? So for the debt market in general, it was established in 2009 Since then, until 2018, the number of issuances, the trading activities were a bit limited in the debt market. And under the Financial Sector Development Program initiatives to enhance and develop the debt market with its liquidity and market depth. In 2018, we fortunately enough had the government list the Sukuk and bonds in our market. The trading activities since then, the issuances have increased massively. In 2019 alone, we had 5 billion values traded in comparison to the previous years where it used to trade in 100 million on average. In 2021 alone, this number jumped into 38 billion riyal values traded. And in the first, sorry, that was in 2020. And in the first half of 2021, we have reached 20 billion worth of trading, which is more than half of what happened in 2020. We see a growth trend in terms of values traded as well as the issuances from the government Sukuk. Today, the total issuance size of the debt market stands at 350 billion. We have different corporate Sukuk in the public market as well as in the private market. We've done different initiatives to enhance our debt markets in the Saudi Arabia, and it falls under, first of all, restructuring of the fees when it comes to trading, as well as the registration issuance for the issuers. We have done a full revamp on the information provided to the investors on our website, whereas today we provide all the critical information needed to incentivize accurate investment decisions. We have launched our Sukuk index in collaboration with IHS Markit, which is one of the largest global providers of fixed income indices. Today, our fixed income indices are subdivided in 12 indices, subdivided into different maturities. And this is an effort to support a reliable yield curve. We have done different technical developments to onboard the primary dealers to act as the market makers in our market to support the liquidity in our market as well. We have provided different services for the market makers to enable accurate pricing to the market makers and to lower the spreads in the securities to incentivize investors to step into the market. We have also enabled our repo services to support financing activities and further incentivize the liquidity in our market as well. One of the recent and most important launches was the linkage between our local CSD, international CSD, such as Clearstream, to onboard international investors to our market. We have recently also removed the qualified foreign investor restrictions to our market to basically allow for all non-resident foreign investors to step into our market as well. We've done a lot of developments, both technical and regulatory, in our market, which includes also lowering the requirements for corporates to issue their Sukuk and list our market. Those different incentives have, of course, led to increasing the liquidity in our market. We've recently seen one of the corporates announcement to issue their public Sukuk to be listed in Saudi Exchange, as well as we have enhanced the disclosures for private issuances to shed more light on the corporate side activities in the private market and the activities there. All in all, I think our recent and future developments helps a lot from technical perspective to incentivize green Sukuk and all types of Sukuk to step into our market and list in our market. We will work on hand on hand with the issuers as well as the investors and the regulator to ensure that our market is developed enough and has all the required standards to allow for the green Sukuk or to incentivize the green Sukuk to list in Tadawul.
Thank you for that, Reem. That's it's great to hear, and I think lots more of exciting things to come from the Saudi capital markets in general as all of these initiatives take shape. Abdulaziz, I mean, thanks for the presentation. I think really great to hear from you on the process that you went through and the journey that Saudi Electricity went down as they put together that everything that went into that debut Green Sukuk. What I think would be useful for, I'm sure there are a few people on the call who are potentially prospect issuers themselves. What were the key challenges that you faced going through that process?
I think relatively SEC's experience was much easier, but let me cover it from two main aspects. One is given that the strategic commitment from the board of directors and management, and also the government's target to promote green and ESG and sustainable financing and sustainability general, that made it very easy, or I would say much easier for us to formulate and basically package the story and the strategy to the investors. Obviously, a key challenge was that we were not able to meet investors in person. COVID was an issue. As I said, the credit story of SEC was there already. It's just a matter of reaching out to the different type of investors and explaining that strategy and why they should invest with us. And given also the fact that there are so many rumors happening in greenwashing and stuff, especially it's coming, the first issuers coming from the largest exporter country in the world of oil. So it was not an easy, I would say, communication to have. But I would say that's the one giving that message and convincing message and strategy to the investors. But I think it's going to be much easier if the board and the management commitment is there. In addition to that is basically going through what is the best practice, the market, what the market is expecting us, proving, having an ESG for the first time and proving the ESG credentials, from publicity perspective, from reporting perspective to the international standards. It was a hectic exercise to do. We're for the first time reporting ESG, and then we're going immediately to put a green Sukuk framework that we're intending to tap into the market and issue in the green space, and giving the story at the same time. It was, these, I would say the main three challenges that we went through. But it was, great challenge. We've learned a lot, and I think we also opened the market for other corporates to come and replicate that experience. And actually, we look forward to replicate the same experience from SEC's perspective.
Yeah, thanks for that. I think that's a consistent thing we see, that when you've got that top-down support, as well as sort of everyone, like yourself, working very hard on the sort of operational bit, putting in place that framework and getting the SPO done, it certainly does go a lot more smoothly than the other times. So great to hear that. Timucin, maybe I can turn back to you for a second here. We've talked a lot so far about green bonds and green Sukuk. What about the wider integration of ESG into these issuances, where you've got just a normal corporate Sukuk? What are you seeing on your side in terms of that extra uptick in focus on ESG?
It's a very relevant question. So, and I think the transactional side is only small part, a relatively small part of the equation. What we are seeing is, we have talked about different types of ESG strategies. We are seeing ESG factor adaptation becoming very important. So even if you are a traditional commercial bank, financial institution, asset manager, you don't necessarily have a specific ESG labeled product in place. What we are seeing globally is a lot of institutions are incorporating ESG factors in their due diligence when they make their investment decisions. And there are clear reasons behind it. And I think the key issue is the increasing understanding of financial materiality. Oliver, you know this very well. The ESG risks are not necessarily reported on the balance sheets or the financial statements of companies. So you might be looking at it as an investor to two companies. Let's say you are going to buy the equity of them or the debt of them. Financially, they are all the same. They have exactly the same type of returns, same type of leverage metrics, but the way they reach to those outcomes can be significantly different. One of these companies, such as a mining entity, might have significant tensions with the labor force, or they might have environmental violations that you are not aware of. So 6 months after you buy into the bond or equity of the asset, suddenly you face a huge loss because there is a strike. The production facilities will be shut down for the next 9 months, or they're going to have a large environmental case. So that's why, with this understanding, ESG, the investors are adopting, incorporating ESG factors more and more to their analysis, and they do ask for additional data. So they want to see, we're not going to go into all the details of this, but environmental metrics, social metrics, and the type of governance you put in place as a company to manage these exposures. And when they speak to the companies, they want to understand whether the companies are aware of their risks. Are they able to proactively identify them? Do they manage them? And are they able to communicate them to their stakeholders, especially investors, in the form of sustainable reporting? So there is a much larger world out there in terms of ESG, and we are now seeing it in UAE, for example, with the recent requirements on sustainability reporting.
Yeah, definitely. And I think that is really important to think about it. You know, as you said, the green bonds, the transactional bit is just one small piece. There is this whole wide sort of ESG universe out there. And it really does kind of pay to be aware of all those different things and how they link together. You know, investors are stopping issuers 10 minutes from the end of a non-green bond roadshow and saying, I need to ask you these 5 questions on ESG. If I don't, then my ESG analyst is going to stop me from investing. And that's obviously a seismic shift. And means that even if you're not thinking of going green, you still need to be thinking about going green at some point to be able to kind of address those questions. Reem, I'd like to get your thoughts on the investor piece, which I think we're starting to come on to, but maybe taking a step back again from that green bit, looking at the Saudi market as a whole. I mean, what are you seeing in terms of the sort of the investors in Saudi? How's that sort of space maturing?
So when it comes to the debt market, after the listing of government sukuk, we've seen that the investor base definitely have increased to double of what it used to be in the past. Of course, after the very good and successful launch of the link between EDA and Clearstream, as well as the future one with Euroclear, we expect more foreign investors to step into the market. And especially after the inclusion of the government sukuk under the FTSE Russell government or emerging market government bond index, we expect more international investors to step into the market. When it comes to the local investors, definitely we see the majority of banks are very active in our market, as well as GREs and as well as retail investors. In an initiative to support the government, or SAMA's initiative to support household holdings, we have reduced the government sukuk denominations from 1 million to 1,000 to increase the trading activities, which incentivize retail investors also to step into the market. It incentivized corporate investors and institutional investors to further trade in the market with the smaller denominations. We see this number growing, as maybe we've mentioned the numbers of the trading volumes at the beginning. We do see a growth trend in the debt market, especially after our initiatives to increase the awareness into the debt market. This maybe sheds the light on the direct investments to our market. The indirect investments come through the recent listings of Sukuk ETFs, where a lot of investors we see stepping into the market through the Sukuk ETFs, or also the funds, the public funds, be it mutual funds or any or money market funds. So we see a lot of investors stepping into the market directly and indirectly. When it comes to the ETFs, we do see more ETFs coming into the market. We've seen maybe 2 in 2020 that the underlying were government sukuk, and we expect more of ESG ETFs to come to the market in the future.
Thank you, Reem. That's really great to hear, and I think it's interesting to think about some of those new products as well. You know, ESG ETFs and the benefit that those can bring. What I think would be, I mean, on this topic of investors, I think it'd be good to think about, I guess, first of all, you know, on the green side, with what's happened, and get Abdulaziz your experience on that, and then Timuçin, go to you in terms of the future. So Abdulaziz, I guess I'll start with you. I mean, you mentioned your roadshow, obviously not the usual roadshow that you would have had, where you were in X number of cities over X number of days, and probably not as green a process as the new virtual ones that we're all used to now. But how did you find that kind of engagement on the ESG side? As you said, the SEC credit story is very well understood and very strong. But obviously you're bringing that new kind of element to it. You know, you have ESG analysts coming in and getting more involved. It'd be great to hear some of your thoughts on how that went.
I think, yeah, pretty much, it was unique experience, not covering just, as I said, financial and operational and strategy. It's more into a technical, how are we, for example, when we get into the right, talking about the ESG analyst, and people are interested in ESG targets and stuff. You get into the discussion of what is your CO2 emissions, and how are you going to achieve that. There are some technical and investment targets that we need to basically illustrate and explain how are we going to get there. It's a commitment story of an investment, and it was a key that the discussion we had with them is some of it has already been materialized, and we're saying we're doing this not only just SEC cannot change its strategy because it's even a government and sovereign strategy to go towards that goal and objective. So the question was, how can we illustrate this and explain this to the investors? We met with different type of investors, not only just regular one, the green one, which have again they do their own homework when it comes to the credit, and the discussion is all about the green and ESG commitment goals and targets. So that was the I would say the unique experience that you need to prepare yourself, not only financially and operationally, but also more about the targets and how are you going to achieve those targets, and you need basically to have a convincing story that there is a tangible plan and investment to achieve them.
Thank you, Abdulaziz. That's great to know, and I think obviously that interesting kind of dynamic between bringing that in, that green angle, is always one that debut issuers I think find a unique challenge that you don't normally sort of get to see. Timuçin, turning to you, you spoke a minute or two ago about the fact that there's all these different bits of ESG, all these different considerations, but really, how do you see this evolving? Obviously, it's changing so fast, and I think anything we predict today will be completely different to what we predict in 3 months' time. But what are the sorts of things that you see going forward?
Definitely, and it's a very fair statement, anyone's guess, but I think what we will definitely see is a lot more data and disclosure requirements. We are seeing efforts for standardization. The key issue with the ESG risks and exposures are these are not reported, but as you know, there are a lot of efforts out there now to ensure that these are presented on the disclosures of companies. Globally, we are seeing in many jurisdictions, listed companies need to have integrated sustainability reporting. They need to give their exposures. So this is one huge area where we will see potentially a lot of move. So when ESG practitioners, they look at these companies, they will be able to look at one point on a standardized basis. This is your emission, that's the other emission. And a key, probably the hottest topic in the market now is, Mr. Al-Muhaiza also referred to, is the emission levels, especially in Europe. You know, globally, the emergence or the expansion of the ETS systems, carbon taxation systems are increasing. It first started in Europe. This year, they also signed off on the initial draft or the preliminary work on CBAM, which means cross-border adjustment, which means even if you don't have regulation at your home, let's say you are an exporter company in Turkey, you have high emission levels, you want to export to Europe, at one point, your products, if they have high emission levels, they might be taxed at the border. So clearly, carbon taxation, emission levels are gradually becoming financial materiality as the regulations develop across the world. And I think we generally see more questions from these investors, especially in the developed markets, on emission levels. If the emission levels are high, what are the companies doing? What type of projects they have in place for emission abatement?
Yeah, thank you. And I think that whatever happens with the carbon border adjustment is going to be something that really shakes up the world. I think it's easy to think, oh, it's a Europe issue, or this this green agenda, but this is going to really for anyone elsewhere in the world thinking about selling their products into Europe. It's going to very much kind of change how people need to look at it and think about it and take this into consideration better. But we're on the hour mark, and I think a great panel discussion, some great presentations as well before that. And clearly ESG and the green agenda is not going away anywhere, and one that's we all need to be sort of focusing on, looking at the kind of the different sort of factors that are coming into play and all these new things. As you've just been describing some of these new trends that might come out. But I'd like to kind of offer, I guess, the final question to Abdulaziz, as the one person who on this panel who has issued a green sukuk. If you had to give one single piece of advice to one of your peers in the kingdom, if they were looking to go and issue their own green bond or green sukuk, what would that one piece of advice be?
Sure, Oliver. I think I would say that the awareness is growing about green financing, ESG financing. The issuance process gets easier and each transaction's coming off. The market practice is getting clearer and clearer, and what the market is looking at this region specifically is there. The range of industry development framework to leverage, including the ICMA green standards. Also, in KSA, we have a national agenda to prioritize transactions towards sustainability and diversification. So I think the advices, or maybe the one piece of advice that I would give, and I would say, is that sustainability by itself is a key. Every potential issuer needs to make it easier for them to build a clear internal tool and process to have a robust and strong assessment of sustainability development goals to show the impact of this to the investors. Measuring impacts can also help, and it will help, and this is one of the things that we visit from the investors. You're investing in digitization. How it's green? It's reducing the emissions by reducing the losses of the that's one thing that is really important, measuring the impact. So if an issuer is already investing in certain projects that can be clean and environmental and has social and environmental benefits, that can be estimated and measured in line with the relevant standard, I think the sustainable financing instrument, of course, would be a smart choice. It offers an opportunity to the issuers to broaden and diversify basically the investors base and also the demand.
Brilliant, thanks for that. I think great advice to anyone else thinking of tapping the market. But on that, Michael, I'll hand back over to you to wrap things up.
Well, all that remains then really is to thank our excellent panelists, Reem, Timucin, Abdulaziz, and Oliver. We wish also to thank our audience staying with us, and most especially our sponsor for today's event, S&P Global Ratings, without whom this event would not be taking place. Please then do stay tuned for more GBSA events throughout the end of the year and beyond. And we look forward to being with you again next time. Stay well and stay safe.